very, very wise and learned panel in front of me. We're going to explore approximately 3 questions and delve into some different issues here. So I think the first thing we'll do is ask the panel to introduce themselves. So starting with Mike.
Hi, Mike Jones. I'm Director of Payment Operations at the Bank of England, so I have day-to-day responsibility for the operation of RTGS and CHAPS.
Hi, I'm Araba Eshun. I head up legal and compliance in Europe for Plaid.
I'm Adam Jackson, Chief Strategy Officer at Innovate Finance, and we represent a wide variety of fintechs that use open banking and open finance.
Chris Hemsley, I'm a director at Fingleton. We're a strategic consultancy, and until recently I was also at the payments regulator and spent a lot of time on trying to get open banking accelerated.
Excellent. And I'm Davey from Open Banking from the strategy side. So let's get into some questions about how innovation, regulation, central entities kind of work together. So this is about the balance, getting the balance right. So how do central bodies, so central banks, regulators, and regulations, how do they and innovators stay in constructive tension to enable products and services to come to market? So let's start with Chris, because you're looking at it at the moment.
So I think I might do that thing of sort of questioning the premise a little bit, because you sort of, that idea that regulators and innovation are in tension and that there's this sort of tricky balance, I think it's worth unpacking that a little bit, because and distinguishing between the what people are trying to achieve and what they want and the how we're going to get there. Because on the what, there's actually a really good degree of alignment. Because what do governments want? What do regulators want? Well, they really like innovators. Innovators bring competition, new products, they give consumers what they want, it's usually more secure, all these sort of really good things. And those are really tricky things for regulators to do on their own. So they want firms to come in. So on the what, there's actually, I don't think there is a balance or a tension. Now on the how, okay, so those prices, or precisely what consumer protection, or how fast are we going to move, who's going to pay for what, okay, that's where it gets difficult. But I think it is worth distinguishing those two things, because and keeping that in people's minds is on what we're trying to achieve, I think there's a huge amount of alignment. On the nitty-gritty of how do you take those individual decisions, yeah, there's loads of winners and losers, and that's where it gets a bit more tricky.
Okay, I'm not going to disagree. I think that's a very interesting view. On sticking with central bodies, thanks Chris, central bodies and how they can kind of, the tension between the two and innovators. Mike, from a central bank perspective and an RTGS perspective.
So I can talk about this from an operational perspective. This isn't a stitch-up, so I'm going to broadly agree with Chris. But how do we think about it? I mean, we're unlikely as a central body to be at the absolute forefront of innovation, and that's probably right given our role. What are we looking to do? We're looking to convene, orchestrate, collaborate with people to create an environment for safe innovation. And so, for us, specifically, that's about making sure that a lot of things that happen in payments are ultimately underpinned by settlement and central bank money, because that's the safest way to do it, and it takes risk out of the system. And so, to use some examples, we've just been through a big renewal program to update our RTGS. That was partly because it was very old, but also because we realise there's a lot of things going on. We need to be able to keep pace with that, and so we've created something that acts as more of a sort of launch pad for innovation going forward. It's much easier for us to change it and do different things. And so, again, picking on something within that, we've introduced quite a wide range now of APIs. Mostly for query at the moment, but again, we see that as a basis we can move forward on, do stuff in future which might allow you to initiate payments. And I think we'll also take that further from a payments perspective. So maybe again to pick up what Chris said, one of the things that was announced yesterday is we're looking at enabling synchronization of a cash movement in RTGS with an asset or another payment movement in another ledger elsewhere. And we've just announced that we're going to have a lab. It has to be called labs now. It was a sandpit, it's now it all changed around. But we've announced having a lab, and the idea of that is to allow all the parties that might be involved in synchronization to come together and to test it out and see what works and see what doesn't work. And to Chris's point, to try and mark your way through that and get a safe how that you can then roll out further.
Excellent. Well, I like the term lab. I think I have to use that more. We're still very sandboxy. Coming on more into the kind of innovator space, what do you think in terms of innovation and regulation? is it beneficial? Is it helpful? Or is there creative tension? Is it more problematic as a whole package?
I mean, from an industry perspective, there is tension because at times we do find the infrastructure quite lacking. If I listen to the points that other panelists have made, I think about the collaboration and making sure that we have the foundations that actually help the industry. Right now, I look at some of the APIs that we use, etc., and there isn't consistency with all of the industry incumbents, and I think that that's a big piece that will really help innovation in the long run and help larger businesses really want to come into partnerships with businesses like Plaid. That's one of the main things that I think needs to change.
Okay, so Adam, on that one, so what do you think will unlock more innovation through sort of regulation, but also other coordinating entities and central banks coming together?
Yeah, I think the first thing is this is absolutely an area where innovators, our members fintech, say we want regulation to unlock innovation, to unlock growth, to unlock competitiveness. So we hear a lot about reducing the regulatory burdens. This is not an area where regulation is seen, if it's done right, as burdening growth, but actually unlocking growth. So what do we need to see in that area? I think there's some immediate things that you touched on, of finishing the work on open banking, which means the phrase levelling up, but essentially ensuring that there's consistent, reliable performance right across the ecosystem, across all players, and applying the same rules. That also means some infrastructure piece. That means giving OBL the powers to actually be able to introduce levelling up performance standards and apply them to everyone. That also means looking at the infrastructure, and on the payment side, there's some basic enhancements that are needed that we see for open banking payments, of certainty of fate, so that everyone in the chain knows the payment has gone through or what's happened data-wise. Also adopting ISO 20022. So there's some basic infrastructure, making sure everyone uses the same rules, and then I think we can then start to build, and that's the other regulatory piece of having a future entity. And again, our members fintech say that means giving OBL the powers to introduce other forms of open finance, to build out from open banking and start building an open data economy.
Yeah, that would, from my perspective, that would be great. But how do we unlock that? So coming back to Chris's point earlier on, I think lots of people have agreed that governments, regulators want that, those sorts of things. But the how. So can we unpack a little bit, just very quickly, the how is that coming to work in practice? So who is the decision maker in that? How would that be achieved? So I'm looking at Chris because he said it first, but then we'll go to other panel members. So,
picking up that point, there's lots of decisions that, what standards do we need on the data side, who's paying for what, and all those sort of things. It creates winners and losers. It's going to be difficult to, I think, if you're setting up a central body to do that, or the regulators doing that, the one thing that you need, in whichever model you're going for, is real clarity of your objective. So what are you prioritising? And at the moment, I think there's a bit more that we could do to really unpick that, because if you're prioritising speed, or you're prioritising different technical capabilities, or you're prioritising competition with cards, you take slightly different decisions. So I think you need that real clarity from government, regulator, the central body. How are you prioritising decisions? And then you need to take them, because you need, good, and that's good quality governance. You need transparency. People need to be heard, and then you need to take a decision and move on. Because I think the other thing that is really dangerous here is just the lack of pace, and that firms that are investing, they haven't got unlimited cash. They haven't got unlimited patience. So that need to take those decisions. But it's easy to say take a decision. You need that clarity of objective purpose, and and the governance to do it, and it's not easy. The Bank of England's quite good at taking decisions.
You
but
sorted it out.
We try, not a problem. Well, look, I mean, it's a nice segue into the recent announcements around retail payments in the UK more generally, and Chris has said, a lot of things. I'd say, I think there has been a need for an overarching strategy to give some form of direction. Now, that shouldn't be, I expect that's going to be an outcome space. That's not going to be too kind of directive, and I think that's probably right, because as you say, Chris, then you've got various ways to sort of cut the cloth to get to the point you want to. Yeah. But I think the idea of this new structure is to provide that kind of headline, this is where we want to go, this is a sort of rough order of the things we want to do, because that helps you break up some of the kind of congestion that you get. And hopefully by providing some of that clarity and simplicity, it does create room and space then for people within a framework to go out and identify the right things to move the world forward.
So just on that, that's the RPIB, the Retail Payment Infrastructure.
PVDC as well. There's lots of acronyms you've got to into. That's the overarching authority strategy setting body. Yeah.
Okay, right. So the last I heard, that was on track to meet the first time at the end of this month. Is that still happening?
Still on track. Strategy due to come out fairly shortly afterwards. So hopefully that starts to. And look, it will be a start. Yeah. It's not going to be the finish of it, but hopefully it starts to give kind of material and structure which allows us to collaborate and move forward together.
Take decisions, right?
Yeah, that's part of the parcel.
Part of the parcel, taking decisions. So Adam, just going back to your list, so does that give you confidence that the decisions will be taken and things will be moved forward, some of the suggestions, or do you think that there's a bigger role for either government or other agencies in moving things forward?
On payments or more generally?
Well, payments more generally.
Yeah, look, the establishment of the infrastructure board, delivery company is, definitely some progress. It's taken us a year to get this far from having a national payments vision. We still need to identify, and the key thing we're waiting for is the design notes, if you like. What's the purpose? What are we trying to build? The outcomes, and then we can start to work out what the right framework, the right structure for that is. I think that's specific on payments, but what we also need to make sure is we crack on with the enhancements I mentioned. But I do think there is a wider piece, and almost if I can kind of take it out from thinking about payments, of that's, if you like, that's the short and medium term. That's where we're going with open banking. But ultimately, thinking about open finance and smart data, this is about a data-driven economy. This is about how we build an AI-enabled economy, because that depends on data and that depends on trust. And that's why having a governance framework and a standards body becomes so important, because open banking, smart data provides the basis of quality data for AI, which means you can rely on the decisions, the advice, the agentic piece, and B, you've got a trust framework, which means the consumer has confidence in how their data is being managed. And I think alongside the very specifics that we need to do on payments, we also need to just start thinking a bit more about this is also essential infrastructure for AI.
Really good point, really good point. So moving on to the second question that we had, what do innovators need from central bodies, coordinating bodies? What do they need in order to progress? So some clarity.
Bringing it probably back to my first point, I think that we need mandatory universal API standards that banks actually have to adhere to. If I think about it, and some of the smaller banks that we integrate with, at times they haven't integrated the standardized APIs, and it causes a lot of problems for companies like ours when we are trying to service our customers, and we're going and trying to integrate lots of different API standards. So I just feel like if the bodies, the regulators come together and they make sure that everyone has to adhere to the same standards, that will make it so much easier for innovators and the industry in general.
So that's kind of bringing out the level playing field argument that once the tech's there, everyone can innovate and compete at the top level.
Just to add to that, it's also about consumer experience.
Yeah.
So I don't think it's just level playing field. Unless you have ubiquitous standards and reliability, you can't guarantee to your customer that it's going to work every time, it's going to be fast, that whatever accounts they might have that you want to connect are going to connect. So I do think it's also about customer adoption, not just the kind of competition piece.
Yeah, there's a degree of competition between all of the new principle-based standards that we have as well, because if you put consumer duty at the forefront of everything, if the consumer isn't having a great experience because of the standards that aren't being met, what do we do? It becomes really difficult when you try to operationalize.
Do you think, just moving into open banking for a short period, do you think there needs to be more standardisation of what the consumer actually sees in the banking journey? Because we do have standards for that, but it is quite fragmented in terms of the journey. So where does the standard sort of start and end in that journey, do you think?
I mean, to an extent, I feel like the industry needs to have some sort of flexibility depending on their audience, right? Millennials won't want to see the same thing that a boomer wants to see or Gen Z wants to see. So, yes and no.
Yes and no.
Yeah.
It comes back to thinking about this as infrastructure and critical infrastructure, which sometimes we forget. And, it's a bit like, in terms of, with railways, we've sort of worked out that generally having competing tracks doesn't work. So there is a single, if you like, independent operator for the track, but you have competition in the services, and the same for motorways. So I think it's sort of thinking about where do you need standardised approaches, safety or trust, technical interoperability. That's in the infrastructure layer. If you get that right, but that's not a layer where you have competition. That's where you do need a kind of a close entity that interacts with the regulator. If you get that right, then you can have much more competition in terms of who uses the tracks and how they're used, which I guess then does come back to competition ultimately in what the consumer might see or how you use those tracks to provide a unique service to customers.
And I think building on that, because I think that's a good analogy, is that I think some of the things are probably, consumers are sort of lazy. I say that as myself, it needs to be really super convenient, particularly in payments, because the standard's already quite convenient. So I think thinking about making sure that consumers have got enough understanding that it will work. So that does point you towards, is there something that would just, a bit like the contactless logo, goes, this will just work? Now, I think a more controversial debate is around what level of sort of minimum consumer protection is needed. But I think on that is that if one of your objectives is to have more choice and competition, I think you've got to try and resist the temptation to try and build another Amex, Visa or Mastercard, because they're already out there. They're good at that. Yeah. So you need to give space for innovators to find other kind of niches and to sort of do things. Now, of course, it's got to be safe, and the consumer duties are a really useful kind of fallback. But I think that I think is one of the things, is like just distinguish, give customers enough comfort that it'll work, but give the market, competitors, innovators enough space to do different things.
Yeah, I mean sorry, just coming back on that one, the consumer protection one, and where is it a competitive space versus not competitive space? It is a debate that is ongoing still and has been going on since I've been in business, so which is a long time.
I think I signed a report about 5 years ago about that very topic.
Exactly. But it does make a point that you do need to differentiate the products as you go forward. There's no point rebuilding the same thing again and again. But just on the wonderful analogy, which is not pipes and plumbing, which is thank God, because that's the one that's always used. It's bringing back Mike, who does do this.
I'll get my wrench out now, shall I?
Yeah, get your wrench out. So how important is it to start building out things like APIs and the technology at the centre to get like seamless journeys?
I mean, look, to our point of view, if we want settlement to be ultimately underpinned by central bank money, we need to make sure central bank money is accessible in a safe and reasonable way. So
That makes sense, yeah.
that's why we've gone about this. And I think it's an interesting discussion because I think that standards piece. I mean, I can talk about it from a wholesale point of view here.
Yeah.
I mean, retail's still got places to go, but I totally agree with Andrew. You've got to build a lot of this stuff centrally. We've moved RT onto ISO 20022 precisely for that reason. But I think the interesting part is actually then you still need quite a lot of collaboration to make the most of that. So even if you provide it centrally, there's still then a lot of discussion about, well, how do you use what's been provided? And so we've been spending a lot of time with industry discussing market guidance so that people do, in key areas use this, kind of opportunity that's been created in a consistent way. Now that doesn't then mean you can't then use the data that's been put in a consistent way differently to provide different kind of commercial opportunities, but it does mean that it's there. That sometimes helps us from a central perspective, but I think it does help the market then genuinely innovate because you've got the material there to do it.
Yeah, I mean, that's raised a very good point, which is even though you've built it in a centre, and this could be in retail or wholesale, how do the innovators know what you've built and what they've got access to? So that's about the education piece, about kind of getting them involved. Sandboxes, which now...
Could be a lab, could be a sandbox, depends what you're looking at. We tend to be sandbox, regulatory, lab, practical.
Okay, there's a difference, that's good to know. So but is that thing about not just building it, but actually making sure people understand what it's built and being able to use it?
Well, I think it's working with people to identify those opportunities, and again, to see where you should be doing something either centrally as a collective, because it makes sense to do that because you get a lot of bang for buck. I mean, it might be, for a lot of data things, the benefit is for the receiver, but the sender needs to put it in, and so sometimes you need, in our case, the central bank to be part of that to solve that sort of network problem. But for a lot of it, then it is about, it creates opportunities for others to exploit, even if we're not engaged directly in it. But because you've created the right base, it comes back to that being a bit of a launch pad for innovation. Because you've created the right base, people can look at it and say, okay, well, how can I now exploit this? I know I've got this information. I know reliably this will be included in payment messages.
Yeah.
What is it I can do with that to make my customer experience better, my internal processes better?
And I think there's a lesson learned for overlay in making the most of that and also being part of that end-to-end journey. So everything works very much.
Absolutely.
We see that in sort of fraud, for example, adding information from the source all the way through the journey is very beneficial. I'm just conscious of a bit of time. I did have a final question, which is a kind of future-looking one. So, future state, what are the big areas that need to be discussed between regulators and central banks and firms and standard setters like ourselves in open banking that will define the next decade of payments and data services? So what are big conversations that need to happen? And who wants to answer that one first?
I mean, I'll do it very quick. On the basis we're doing very quick. I mean, I would say if you picked a word, one of them's going to be interoperability. If you've got a multi-money world, you've got to work out how you interoperate between systems, between types of money. That's going to be quite complicated. That will require cooperation, collaboration. It will require common standards, all the things we've been talking about here. So that's one of the areas I pick up.
Interoperability, and that's cross jurisdictions, cross currencies,
I mean,
cross different types of assets.
As far as you can go, but we'll have to work bit by bit. I don't think it'll be there. Absolutely.
All that. Okay.
That's a multi-money world, mate.
Multi-money world. It used to just give you notes and points. And checks. Let's not go into that. Chris.
Oh, you come to me.
Now, yeah.
Yeah, no, that's fine.
No creepy death, Chris.
Yeah. I guess, I mean, the core capabilities, I think, you've spoken about. I think the build that I'd get is that I think if you're investing and you're innovating, you need the confidence that in 2-3 years' time you can get access, that you can connect to these systems, and that you kind of know what the arrangements are going to be, the kind of risk and the costs over time. So I think there is that job of having that confidence that over the longer term you can, because you're not going to build a very good business case if you're worried that you're not going to be able to connect to these systems next year or something else is going to change. So there is a kind of regulatory uncertainty kind of thing that I think is worth paying quite a bit of attention to as well.
Excellent. Araba?
I feel like one of the big ones is fraud prevention, more industry collaboration, also AI readiness, big data, making sure that the guardrails are in place to protect consumers, also having more collaboration with the industry. I know that we have multiple forums to engage, but I feel like inviting specific larger players to have discussions and think about what the future looks like, I feel like that would be amazing.
Adam.
I guess building on that, I think if we look long term, thinking about, particularly coming back to thinking about an AI agentic driven economy, what does that mean? There's making open banking payments work, there's interoperability, but actually it's about how do we then develop and integrate digital identity, fraud data sharing, blockchain and tokenized assets in transactions, and then that's sort of what's needed for agentic AI. And actually, again, it's all going to run on data. It's all going to be best done if it is quality data that's therefore kind of the sort of data you get from smart data. So how can you how can you embed the payments piece into that wider data economy?
That's very wise. And I was just contemplating that no one on the panel was going to say AI in the last few minutes, and you managed to. Because
Have you got another hour?
there was a panel on that yesterday. But yeah, no, that's well, brilliant. Well, thank you very much, everybody, for attending.